Good afternoon, YouTube. This is Miles from Pure Investments, here with our third video in the Trading Tips series. So this is a very important fundamental that I probably should have gone over first, but never too late to learn. And today I'm going to be talking about support and resistance lines, including patterns that coins regularly follow, which help make a lot of good fundamental technical analysis. So let's begin. What are support and resistance lines? Well, they aren't these magical lines that you see being drawn everywhere. You can see from a lot of my staff posts. But these are instead moving limitations in which the coin is having trouble getting past these certain prices. Sometimes we have flat support lines and resistance lines that are straight. Imagine if this line was straight. This is the potential for just, say, Ethereum not being able to pass $355. Or let's say if it's above it and it's trying to go down, if we had what we call resistance here, that means it would have a hard time breaking below 355. A lot of the times these things are psychological, and a lot of these times are also based off of what traders are expecting. There's a common resource for patterns that you can find online. I'm going to link to an image that clears up all of the patterns on our YouTube channel. But in the meantime, let me explain what support and resistance tend to do. First of all, support is a line that falls under the current price. We call this support because when a price falls down to here, it either usually bounces back up or it continues downwards if there's enough selling momentum. This top one's usually best case scenario, and this is the example we don't want to happen. Resistance is the opposite. It's what's resisting the price as the price increases in buying momentum, and if there's enough momentum, sometimes it will break through, but in most cases there's not enough momentum and it falls back down. So resistance is a thing that usually doesn't seem too good. I usually sell off at resistance if it looks like it's not going to break out. But if it looks like it's going to pass resistance, then I might actually stock up on more, because once it passes through a resistance level, the price tends to be volatile and it shoots up. But the same could be said for support. While you can have a very volatile bounce off of support and go back up, which is usually a good buying point for me, it could also very well break through and plummet even more severely, making you lose a lot of money. Which is why stop losses are always important. So if I have a stop loss here and the price crashes all the way down here, then I'm out a lot earlier than most people in the market are. So now that we know what support and resistance is, let's look at some patterns. First, I want to show you this example of Ethereum. This is one of the charts that I have on my TradingView account. You can follow my TradingView charts by visiting the link that I posted in the description. So let's look at Ethereum. We had some long-term support here. As you can view out, I drew this across the tops of every single all-time high Ethereum has had recently. Usually when you're drawing lines, you want to connect the tops of candles or sometimes wicks. This just connects recent highs that a coin wasn't able to pass, which is what generally a lot of traders are looking at and basing their buys and sells off of. So it's smart to play in favor of the pattern because a lot of other traders are, and you can make a lot of money playing with these lines. So we also look at another line passing through some smaller peaks. We have it bouncing off, trying to break up off of this. So I look at that. At our lower line, we have a bounce here. So I drew a point there. We bounced off of here again, so I connected these two. We had another bounce. Let me move this. Sorry if these aren't aligned anymore. So we had this bounce, and then another bounce here, kind of a bounce here, kind of a bounce here. So I connected all of these on one line, and so on, until I got these major support and resistance lines here. And based off of this TA, it's looking to try and break this resistance, and let's see what happened after it tested that. What do you know, it shot up and hit an all-time high. As you can see, there was a major pump once it broke out of here, going from $360 all the way to $480. And then now it started to do its own trends up here. This is a whole new set of TA that's no longer following this stuff because it's irrelevant. Maybe it will come back to play if it comes all the way down, but we won't know that for a while. Okay, so let's actually look at what some trends are. Yeah, there's plenty of examples. I use trend lines all the time as they help. And you can view my charts for examples of what happens after they stop following these trends and how I choose these lines. Such as this. This is a bull pennant in which it's bouncing off support lines here and then eventually breaks out upwards. Actually, yeah. So it popped out, but unfortunately it tried fighting this resistance again and fell through. Okay. So let me just get a blank page. So I'm going to step by step go through a few common trends. This is a slightly longer video because I'm only going to have one video this week since I have a busy schedule, so kind of cramming this into twos. So this is the patterns now. So first of all, we'll go through quite a very common trend line. So we have resistance here, support here, and we'll use blue to indicate price movement. So this is what I call an ascending channel, where a coin can either start off in the ascending channel and it bounces off support and resistance until it either breaks upwards, and I'll indicate upwards movement of green and red for downwards movement. So it basically bounces off of support and resistance, in which you have a lot of great buying opportunities, such as buy here, sell here, buy here, sell here, or even sell here. This is a very common theme that we see in a lot of coins that are just experiencing regular upwards growth, and can be very powerful if you buy and sell the bottoms and tops. So if you ever see an ascending channel, I'd suggest you play safely, as it can both break upwards and break downwards. Same goes for the opposite. We have descending channels where a coin can just enter, say, into here, bounce off of here, down here, and you get the point. But let me just rephrase that. It could break down here, or it could also break up here. I will show you guys how to set stop losses properly in another video, just because it's going to take up a lot of time to show you based off of patterns. So I'm going to continue to the next one. Blue I'm going to use to indicate a coin movement. So we go, say a coin's mooning, and then it randomly crashes and people think it's going to go all the way back down. But it bounces back up, down, up, down, and you'll notice that the pattern gets smaller and smaller. So this is what's called a bull pennant. This indicates a bullish breakout in which you have a flag here and the pennant here, where the price is bouncing between these two and getting smaller and smaller. This is a point we call in trends, which is consolidation, where the support and resistance get very close to each other. One of them is going to take over, the one that has more momentum, whether it's if buys have more momentum, then the price breaks upwards. But if sells have more momentum at the end, then the price breaks downwards. But what tends to happen with both pennants is that they break up bullish, so it favors upwards movement. You can see plenty of examples on my trading view. There's also a very similar bull shape called a bull flag, where it's kind of like at the top of a pump there's a descending channel like we talked about earlier, which usually breaks upwards because, again, it's bull. So it breaks upwards, but then again, remember, anything can happen and it can possibly go down. Same goes for the opposite. We have bear pennants. Bear pennants are not fun because that indicates bearish movement. So let's say a coin's plummeting and then goes back up. People think there's a lot of faith left in the coin, but it actually breaks down. Same goes for a bear flag. That would be a drop followed by an ascending channel. People think after a horrible crash a coin is going back up, but in reality it finally breaks downwards. So remember, bullish these bullish indicators are always starting up. These bearish indicators tend to start downwards, but that's not always the case because they can go the opposite way of what their name says. Okay, next we have wedges and triangles, which can frequently get mixed up together. This would be an ascending triangle with the opposite being a descending triangle. We can see that a coin may enter, bounce off of here. Support stays at the same level, so there tends to be a price that the coin just can't beat, like it can't beat here, can't beat here, can't beat here, and buying momentum's moving up, so the support's moving with it. This tends to mean that there's more buying pressure than selling pressure, and then the coin usually explodes upwards. A descending triangle, which I usually call a bearish triangle, does the same thing. It's bouncing off. This support wall just won't break, and then it just plummets through once there's finally enough selling pressure and it falls. Note, this is every time that the price trend tries to break resistance or support for all these circles. So we also have another shape which people often think are triangles, but they may be like a bit uneven. These are what I call wedges, or what investors call wedges, where the coin movement kind of goes on these both imaginary moving lines that a lot of people are watching. So you kind of just get these shapes from connecting like previous highs. Say this was a pump on October something, this was another pump on November something, December, and then let's say almost January, it consolidates here and explodes upwards. So those are just wedges. Some more stagnant trends we have are, this is a double bottom, where we have the bottom, which I usually call the floor, usually an all-time low or just a very low point of a month, in which coin movement falls down, it bounces, people think it's going to go all the way back up, but then it falls back again, massive panic, and then it bounces and moves up a lot. This actually happens quite often. Bitcoin tends to have double and triple bottoms. You could actually go for another bottom. It usually falls between 2 or 3. If it just happens one time, we call that a bounce. Same goes for a top, which is definitely a bad thing. Coin price moves up, it hits this wall, it falls back down, goes back up, people think it's going to break through, but actually it falls down very low, and you can lose a lot of money. So if I was watching a double top form, I'd consider selling right here before things plummet again. And if you're looking at the price from this time, you can see that it's rising again, and then you might have hopes that it's reversing to get a double top status. One more that I'd like to talk about before I go on too long for this video is the head and shoulders. This is a very common thing where price goes into this kind of almost both horizontal channel. It hits one point, bounces back down, goes up, breaks through resistance, hits an all-time high, comes back down, hits support. You think it's going for another high, but bounces off of that same resistance line and then breaks back down. So head and shoulders has some good selling and buying opportunities, but it also usually ends up in a negative sense, whereas an inverse head and shoulders, which is the opposite, tends to recover from a really bad crash and then make its way up to another high. So I don't have enough time to go into a lot of these examples, but these are the most commonly used patterns that we use. I'm going to make a video on some more complex ones that require a bit more in-depth analysis of what support and resistance actually are, but if you want to look at examples, I always draw trend lines on my graphs on TradingView, and I'll link you to my profile in the video. I hope you enjoyed this episode, and stay tuned for the next one. Please feel free to comment your ideas on videos that I can make in the future. Thank you.